Alright guys, welcome to Lesson 12, My Personal Trading Indicators and Strategies. This is the final lesson in the DBT course, so if you've made it this far, I want to say thank you for supporting myself and this community, and I really hope that this course was able to help you improve on your trading and give you some tools that will benefit you and give you an edge on the market. And as always, if you guys have any questions, if there's anything in the course that didn't make any sense, please feel free to message me, and always take advantage of that free 3-hour one-on-one tutoring session, and I'll be happy to help you. I'll be happy to clarify anything in this course that maybe just didn't really make sense to you. But yeah, let's get started. So the first indicator that we're going to go over is the DBT squeeze. And this was my very first indicator that I had created based on my personal trading and trading strategies. It's based on a strategy that I used to use in stock trading and futures trading that uses a Bollinger Band, a CCI, and a few moving averages. It's very good at determining when a trend is consolidating and when it's ready to break out of that consolidation. The Bollinger Band does its job to find areas of low volatility, which you can see in the Bollinger Band squeezes that are shaded yellow by the indicator. And it's really good at telling you when is it breaking out of that low volatility, where is price going to move when that breakout finally occurs. And that's where our buy candles come into play. You have weak buy candles that you see here on the blue buy candles. That's when it's below the 200 moving average, which is your long-term support and resistance line. If it's below the 200 and it still gives you the buying conditions, it will give you a buy signal, but it's going to be a weak buy signal. So that will be annotated by the blue buy candle. The sell candles are still the same, the gold candles. If you have a proper buy candle, it's going to look something like this. It's going to give you a purple buy candle, which means the buy conditions have been met and price is above the long-term support and resistance line, which is the 200 EMA. The little arrows that you see here on the DBT squeeze, these are not buy and sell arrows, so don't get confused. These are Bill Williams fractals. So the green are the down fractals, the red are the up fractals. The blue line is the 200 EMA, and the red and green moving average line is VWAP. If it's green, that means VWAP is ascending. If it's red, that means VWAP is descending. This indicator was designed, like I said, back when I was using stocks, or trading stocks and trading futures. But what I noticed was when I started to use this strategy on altcoins and crypto, it was very, very accurate and profitable. I tried it on Bitcoin, which it also works on. But the problem with Bitcoin, you have to be a little careful, because I've noticed if you use the DBT squeeze on Bitcoin, it typically will have a decent surge on the buy candle, but then it will come to an end very quickly. So the buy candle will surge up for a short amount of time, and then the sell candle will trigger, and it usually has a big dump after the sell candle. So when you're using this indicator with Bitcoin, just know that most of the buy candles, they usually do not last very long. Because CCI, the way it was designed, is CCI is supposed to determine areas of overbought and oversold. But the way that I use CCI for my strategy is I use it as a momentum breakout indicator. So the CCI was designed for when it breaks the 100 line, that's typically seen as overbought, and you do not want to be buying in that area. But when I see a 100 line break, I see that as a very strong trend ready to break out of consolidation or break out of a current trend. So I use it kind of the opposite way that it was designed to be used. But I've noticed on Bitcoin that it likes to play towards the overbought, oversold method. So you have to be careful using it on Bitcoin. But if you use it on altcoins, it's pretty profitable, pretty accurate. As long as you follow the rules, you keep a very tight stop. Usually a 1% stop is what I like to use. And also, here's a good example of things that you should look for. If you see stuff like this, if it squeezes a lot, very choppy, gives you a ton of signals, you do not want to use the DBT squeeze on coins like this. You want to look for coins or time frames that do not constantly give you signals, because this shows you that the CCI is very choppy. So if we were to pull up the CCI here, you can see how choppy the CCI is. And it's best to use this indicator when your CCI is very smooth. It's nice and smooth. It gives you that overall trend. It doesn't do this, the constant chop. It's not going to give you very good signals. What you can do is, if you see that, just go higher and higher on the time frames until you get a smoother CCI. If it stays choppy the entire time, just don't use the strategy on that coin. Look for a better coin to use the strategy on. Since right now, at the time that I'm making the course, the altcoins are not doing very well. The altcoin season is kind of not in play right now. Most coins are finding bottoms, or they're just dying. And this indicator is an indicator that finds breakouts. So finding breakouts in coins that are finding bottoms is very difficult. So it's not the best time for me to showcase the best use of this indicator. But you can definitely still get good plays on altcoins when they do start to find their bottoms. Like I stated in the picture examples, if you have buy and sell signals that are back to back like this, you want to confirm that buy signal as a proper buy signal. Typically, the buy candles that are inside a squeeze like this are not the best buy candles. Typically, they are very good when they form when the squeeze is ending. So if we saw, let me see if I can find a good example. So like this one here, this buy candle formed on the end of a squeeze. These are typically the strongest buy candles, because that's telling you it's breaking out of that low volatility phase and it's going into a new trend. It's forming a new trend and it's breaking out upward. Like I also stated in the picture examples for this lesson, the sell candles on Bitcoin are very, very strong. So you want to pay attention to the sell candles on Bitcoin. Even if you don't use the buy candles and you want to just use the sell candles for shorting, you can do that because the sell candles are very strong. You can see the sell candle here failed. This one had a small failure, but it went sideways. This one obviously failed pretty hard. You can look at this on higher time frames and see the same thing. This sell candle kind of faked you out and then fell. This one, these are all sideways. You're on an uptrend. So like I said, you still want to do basic technical analysis to determine if you're on an uptrend or a downtrend. Like this sell candle here would have been much better because you're coming off of a breakout and you're coming off of a 200 test. So you're testing the 200 EMA here. You have a long top wick that forms a sell candle afterwards. This would have been a very good sell candle. You could have taken this sell candle, put a stop loss above the wick or above the 200 EMA, and then targeted the lower band or targeted a price target, maybe this consolidation phase here. You could have targeted that low. There's many different things you could have targeted, but you should have taken that sell candle. If you took that sell candle, you could have taken a stop loss above the 200 EMA. But like I said, when you're using these indicators, they're not going to be 100% right all the time. You really have to do basic technical analysis to determine where you are in the trend. Am I in an uptrend? Am I in a downtrend? Should I be taking buy candles? Should I be waiting for the sell candles? You still have to do some analysis. These are not going to just make you $1 million by just sitting here staring at the chart. You're still going to have to do basic trading techniques. But as you can see, if you just do basic trading techniques, you can see this is an obvious downtrend here. You can see you're downtrending here. And you get a buy candle, but it's a fake buy candle. You can see every single time that you tried to push up here, you failed, tried to push up, and you failed again. So if you would have taken this buy candle, you should have known that you're not really, you don't have a high probability chance to win that trade. But if you take a sell candle, that's much better because that's telling you you've got a lot of resistance here. You're on a downtrend, you failed multiple times. So the sell candle is actually a better option than that buy candle. And you can see, it's hard to see because of the rays, but this sell candle has a very long top wick, which also tells you that it's on a strong bearish trend. And you can see after that downtrend, you have a massive failure. Sorry, after that sell candle, you have a massive failure here. Another thing to look for is when you're trading the buy candles. Let me see if I can find a good example. These are all weak buy candles here. Let's look for some strong buy candles. So for these buy candles here that obviously played out very nicely, it's at the end of a squeeze, you break out upward. If you miss these buy candles, so for example, if you were waiting for this buy candle and then maybe you looked away from your chart or you're just doing something and you missed the breakout, it's always best to wait for a pullback to the 50% retracement of that buy candle. Obviously this time if you would have waited, you would have missed out. Depending on how this candle formed, obviously. But it's always best that if you miss buy candles, wait for a pullback to maybe the 50% or like 60% pullback of that candle. That will make sure that you have a very solid stop loss. Because typically when you trade the DBT squeeze, you want to have a 1% stop loss. If you want to go a little more, you could do like a 1.5 or a 2%, but you really do not want to go more than 2% stop loss. And on Bitcoin especially, you want to have small stops and small targets because you're not going to see those 3% moves on Bitcoin as easily as you'll see the 3% moves on altcoins. So when you're trading Bitcoin, you want to base your targets off probably the sell candles or a lower percentage target. But when you're trading altcoins, you can always keep that 3% target in the back of your mind, or you can just trade basically off the sell candles completely. But yeah, when you miss buy candles, you always want to wait for a pullback. You don't want to FOMO into them because a lot of times the buy candles, they can be head fakes where this thing shoots up, but then it fails right back down to the consolidation. So worst case scenario, if you waited for the pullback, you would have got in, say, here. So if this head faked you, you would still have a tight stop loss, which is like here, and you wouldn't have got stopped out. But if you FOMO into this and you buy in at the top, and then it pulls back, that might be your 1% stop loss, and you might get stopped out, and then it might curl up and shoot up. So it's always best to wait for a pullback to maybe the 50% line of the candle or the 60%. That maintains your stop loss is still pretty low. Besides that, I covered basically everything in the picture examples for the DBT squeeze. Make sure you follow the rules on the DBT. It's always best to keep your stop losses. If you're taking purple buy candles, which are the ones that are above the 200 and above the VWAP, it's always best to keep your stop losses below the 200 and below VWAP if you can. If you can't take them, if you can't place your stop below the 200 or below VWAP, just maintain a 1% or a 1.5% stop loss. You don't want to have a very wide stop. You don't want to use a 3% or a 4% because this strategy is really, as it's designed, if it drops more than 1% from the buy candle, it's a fake buy candle. You shouldn't be holding on to that. So if you hold on to it for longer than that, you're really just shooting yourself in the foot because it's most likely not going to play out properly. So you really want to keep your losses very tight with this strategy. Another thing to go over before we move on to the next indicator is if you see buy candles that are forming after a breakout, so say you have a buy candle here, you get a breakout and then it gives you a sell candle, and then maybe it goes sideways and then you get another buy candle that's way above the 200 moving average, you have to be careful with these buy candles because they are very extended off their main support line. And that's what I was saying earlier. It's always best to keep your stop losses below these support lines of VWAP and the 200 EMA. But if you're taking buy candles that are up here, your stop loss is probably going to have to be somewhere right here, and it's not even going to support you on the 200. So it's always best to wait for the buy candles that form very close to the 200 EMA. So for example, if you took a buy candle like here, took a buy candle here, your stop loss should have been 1%. Let's see if you would have got stopped out. So 1%, this would have been your stop loss. And you would not have got stopped. You would have got very, very close. It would have got very, very close, but you would not have been stopped if you took this buy candle or this buy candle, and then it shot up, and it should have hit your 3% target or your target based on highs and lows. Maybe you were targeting this high here. Maybe you were targeting this high here. You would have hit both of those targets. So make sure you're maintaining a proper risk to reward. And it's always best to keep your stop loss below support. If you take buy candles that are way above your support, then your stop losses are not going to be safe. This indicator was designed for altcoins. It's best used on a 5-minute or a 15. For Bitcoin, I noticed that it's better used on a 30-minute, 15-minute, or 1 hour, so the higher time frames. It cuts out a lot of the chop. But like I said, if you see a choppy CCI, or you're using it on anything that's choppy, if it's like sideways a lot, or it gives you a lot of signals or anything like that, you want to make sure you change the time frame to make sure that it's nice and smooth and it doesn't give you a lot of a chop action. Alright, to move on to our next indicator. Our next indicator is the DBT MoMo. Let me close all this stuff, pull it up. So the DBT MoMo was designed to have a oscillator that was not time sensitive, and it showed us the strength of a trend based on volatility and price action. So it looks for how price is reacting to a Bollinger Band, and then it ties that reaction to a linear regression, creating a smooth kind of oscillator that determines trend strength and where it's extended, maybe overbought or maybe oversold, and it's preparing for a reversal. And I noticed on Bitcoin, it is very strong on a 1 hour time frame. As you can see here, it would have told you that this was extended. Right here, the purple gives you a double buy indicator, telling you to look for double buys. So look for when the fast oscillator, which is based on the 3 candle back, or look for the slow oscillator, which is based on 24 candles back, and look for them to turn from red to green. And when they're both in that extended zone, so when they're both below -10, it will give you that purple indicator telling you caution, caution. It's looking for a reversal to the upside. It is technically overbought or extended. So you want to look for a double buy signal, maybe a buy from the fast line and then a buy from the sell line. So right here it would have given you like a double buy. It gave you a single buy here, giving you that nice double bottom, and then you shot up. You actually had a double sell there, which gold is warning you the fast line is above 10, the slow line is above 10. That's telling you they're both extended to the upside, and they're looking for a reversal back down to consolidation or maybe a complete reversal of the trend. So you had a warning here on the purple. It warned you that it wanted to reverse to the upside, and that's what it did. It reversed. You have a warning here telling you it wanted to reverse to the downside. It did. You have another warning here. It wanted to go up. It did. A warning to the downside. A warning to the upside. And then you started to fail here. You had a sell on the fast line. It went from green to red here. It was above 0. It rejected the 10 line. So that could have warned you that this was a failing trend. Another thing to go over here that this is a good example of is when you see the fast line shoot up rapidly while the slow line is bottomed out, So if the fast line is rapidly moving up, but the slow line is not correlating and it's kind of either slowly moving up or it's going sideways, this is most often a bull trap. They are trapping the bulls. The bulls think that this is a reversal to the upside, but it's actually a trap and it's going to fail. And that's exactly what we see happen here. The bulls think this is a bull move, which it kind of is. You could have taken a small scalp on that. But the overall trend was a trap. This was a trap to the upside and then a failure to the previous consolidation. So always be careful when you see the fast line shoot up rapidly, but the slow line is not correlating. That can also be on the top side as well. So like right here, we have the fast line shooting down rapidly, but the slow line is still leveled out. So this is telling you that it is most likely a bear trap, but this is a divergence here because price is rising while it's giving you that signal. So this one you would have to be a little careful of. But overall, you want to be looking at the fast line and the slow line correlating. When they are both going up, like we see here, they both go up at the same time. They're both going up rapidly. They're side by side. They're giving the same signal. That is a strong trend. That is showing you that the short term and the long term are both correlating to the same direction. They're either going up or going down the same way. Same thing for the downside. If they're both correlating on the downside, that is typically a strong down move. If they are not correlating and they're choppy, that is telling you that it's either a sideways consolidation or price is just very choppy and you want to be careful taking the signals from the MoMo. You want the MoMo to be as correlating as best as possible. If they both are slowly rising, that's usually a strong uptrend. If they both are slowly declining, it's usually a strong downtrend. If one of them is rapidly moving while the other one is kind of flat, that is usually a trap. This can be used on any time frame, like I stated before. It has nothing in the code that is time sensitive. It relies completely on a Bollinger Band and how price is reacting to a Bollinger Band. There's also a few other things to just clean it up, but it's mostly just how price is reacting to the standard deviations of a Bollinger Band and the squeezing and unsqueezing of the Bollinger Band. If they are both above the 10 line, it's usually warning you for a pullback or a complete failure to the downside. So always watch out for the gold signals or the purple signals. Purple is telling you that it's either going to pull back to the upside or it's preparing for a trend shift. This one here is what you have to worry about, because when you're using indicators that are finding extensions or they're finding areas of overbought, oversold, if it is a strong trend, so if it's a strong uptrend or a strong downtrend, areas of extension do not matter. Let me repeat that. If it is a strong uptrend or a strong downtrend, areas of extension do not matter. So if you would have seen this as an extension, but this is a very strong downtrend, it was breaking a range here. So this broke a range. This is a very strong downtrend. If you would have said, hey, this is purple, it's giving me a warning that I should look for a reversal, you should know that this is a very strong downtrend and I should not be looking for a reversal, because this is not extended. It's losing a level. If it's losing a level or it's very, very weak, the extensions are not going to be strong enough to reverse that price. And as always, do not use this indicator as a 100% signal. So if you see purple, don't immediately buy. If you see gold, don't immediately sell. You want to wait for trend and price action to confirm these patterns. So you want to wait for bullish candlestick reversals, bullish trend patterns, price level breaks, anything like that, anything giving you validation. You don't want to just take these signals and be like, oh, it's turning from red to green, I need to buy immediately. That's going to get you killed in this trading, in trading this indicator. If you look at it and go, oh, it's going from green to red, immediately sell it. It's not going to work. You really need to want to wait for validation. If you wait for validation, this indicator is extremely accurate. We can go back and look at a lot of these moves on Bitcoin in the past few calls. You can see purple shot up, gold came down, purple moved up. It didn't give you a gold signal here because it wasn't, they weren't correlating. But then you had that move down, purple, move up, gold, move down, purple, move up, gold, move down. You see, it's a very accurate indicator of where price is going to go next. This one didn't give you a purple, but it did show you red to green, red to green. You got a double buy. This was a double buy, meaning both of them are correlating to the upside. So that gave you a double buy. You got a double sell, failure, double buy, pushed up, double sell, failure, double buy, pushed up. So you can see very, very strong. All you have to do is wait for validation, play the 1 hour MoMo or whatever time frame you like, play that MoMo to the proper side. So if it's purple, you want to be looking for longs. If it's gold, you want to be looking for shorts. Make sure you're also playing to the proper time frame. So if you're looking at a 1 hour, you want to be playing kind of a midterm trade. You don't want to be looking for just scalps. You want to be playing kind of a longer term trading pattern. If you're looking at a short term, like a 5 minute, then you want to be playing quicker moves. So as you can see, this one gave you a little bit of extension, but that's a strong uptrend. So like I said earlier, that could have killed you. It didn't really give you a strong reversal pattern. You still were trending upward. This one here gave you a very strong pattern. There's a morning star. We went over morning star earlier. Red candle down, a small doji, and then a green candle up. You have a morning star pattern in a double buy. That could have told you price was rising. You have a sell candle there, which is almost an engulfing candle, almost a dark cloud cover candle. You have a move down. This one is on a green candle. You should have waited for a reversal sign. This candle might have given you a reversal sign, but you should have waited for that resistance there. You should have waited for the resistance test. Then you could have shorted on the resistance. There's your dark cloud cover. You could have taken that short there, stop loss above the resistance, and then target either the MoMo when it gets extended or target previous levels. You could have targeted this low here. You could have targeted that high. You would have hit both of them on your scalp. This low here, same thing. You have a reversal signal, and then you have that engulfing candle. You should have waited for that engulfing candle. You could have taken your trade on this engulfing candle. Even if you got in at the top, you would have put your stop loss at the low. You could have targeted this high. You could have targeted this high. You would have hit both of them. Let me clean up the chart here to make it clear. You could have taken this trade even if you would have gotten at the top. You could have put your stop loss below the candle or below that wick. You could have targeted this high here, or you could have targeted this high here. So like I said, play to the time frame that you're using. If you're using a small time frame, play for scalps. If you're using a long time frame, play for longer term trends. Maybe long-term trend breaks, long-term bull flags, bear flags, wedges, anything like that. But you want to make sure that you're playing to your time frame. That's really it for the MoMo. Go over my picture examples. I give you a lot of clear signals on how to read the indicator. It's very, very simple once you get the hang of it. It might look a little complicated at first, but once you learn what each thing means, what the shading means, what the trend means, why is it green, why is it red, it will become very, very simple to you. So our last indicator here is the DBT bands. So let me pull them up here. So the DBT bands were designed in collaboration with Roland Crypto. He was my partner on a few of these indicators, not the Momo or the Squeeze, but this one in particular. The bands finds divergences based on CCI values when candles are exiting the upper or lower bands. So the upper gold dots or the lower gold dots are what the divergences are found on. So when price exits the upper band or the lower band, if it has a CCI divergence from the last time that it exited, it will give you a signal. It will give you either a bullish signal or a bearish signal. If a candle is showing signs of bullish divergence when exiting the DBT bands, it will be highlighted by the purple ray like we see here. If it's showing you signs of bearish divergence, it will show you a gold ray. So sticking to the same pattern, gold is bearish, purple is bullish. These divergences are best traded in sideways action. So if you see a sideways Bollinger Band, that's when they are best traded. As you can see kind of here, this gives you a bullish signal, shoots up, gives you a bearish signal, fails downward, bullish, shoots up. So in the sideways price action is when they're best used. They are best used also on a 15 or 30 minute time frame on Bitcoin. These were specifically designed for Bitcoin trading. So if you're trading Bitcoin on BitMEX or Binance or really anything, these were specifically designed for trading Bitcoin. You can use them on other coins or stocks or anything like that, but just know that they were specifically designed for Bitcoin's price action and how Bitcoin is traded. So when you see a bullish divergence, these are not buy and sell signals, guys. You do not want to be taking them immediately. You want to wait for validation, as always. You want to wait for validation. When you're trading these divergences, it's best to take them on a re-entry of the Bollinger Band. So if you have a exit of the Bollinger Band, it gives you that divergence signal. If your Bollinger Band is sideways, which it pretty much is here, it's best to take it as it re-enters the Bollinger Band. Unless it's a really long wick and it starts to come down, then you could probably enter a little early. But it's best to enter them usually when they're re-entering the Bollinger Band. So as price exited, this candle gave you that bearish divergence. It's best to enter when it starts to re-enter the upper band. So you could have taken your entry here, stop loss above the wicks or above the upper band, and then you target the mid band or you target the low band, depending on your risk tolerance. If you would have targeted the mid band, this would have been a very, very small trade. If you would have targeted the bottom band, you would have actually lost this trade. Your stop loss would have got hit before your take profit. But when you take the bearish signals, you want to target the mid band or the lower band, depending on your risk tolerance, how you're taking the trade. When you're taking the bullish signals, same exact thing is said in the opposite manner. You want to wait for that re-entry. So if you see that bullish divergence, wait for a re-entry on a validation candle. So wait for a bullish candle. This candle wasn't really too bullish. You probably could have got faked out by this one. This one would have been much better because you have that very long bottom wick and then you have that re-entry on the same candle. So you could have taken that one, stop loss below the band, targeted the mid band, targeted the upper band, and you hit both of them here. You can see that one was hit and then that one was hit there. These are best traded in sideways action. Like I said, you want to be very careful if you're trading these in a very strong downtrend or a very strong uptrend. If you want my opinion, I wouldn't trade them at all. If it's a very strong downtrend or a very strong uptrend, I would not trade these divergences. You can trade them, and sometimes they are very profitable, but it is very risky because, as we stated before on the Momo, these extensions or divergences are not strong enough to halt a strong trend. If it is a strong uptrend or a strong downtrend, it is not going to be halted by a small divergence. This one here did actually halt the price. So if you took this one, it found a bottom. But like I said, you want to be careful when you're trading those. If you would have taken that first one, it tried to hold the price and then it crashed. You see how we're sideways here, these signals are much stronger. This one pops up, almost touches the upper band, touches the mid band. This one pops up, touches the mid and upper. So sideways action on these divergences are very strong. Same thing here. This is a perfect example. This is a very strong downtrend here. You broke out of a range here. You see how it's breaking the range. So this is breaking a consolidation phase. So you do not want to take these divergences. This is clearly bearish. We broke out of a range here to the downside. This is clearly bearish. If you would have waited for kind of a sideways action, you could have taken it and then put a tight stop loss below the band or below the last price move down. You could have targeted the mid band or the upper band, and this one would have worked. But like I said, you want to wait for validation, wait for price to find a bottom or start to go sideways before you trade these divergences. If price is already sideways, then you can take the trades with a very tight stop, follow the same patterns that we were talking about, bullish candlestick patterns, bearish candlestick patterns, wait for price to re-enter the band, and then target the mid band or the upper band. Same thing here. If you would have taken this short on the exit of the band and then re-entry, you would have got killed because this is a strong uptrend. This broke out of a range. So you want to wait for price to start to trend sideways, and you want to wait for the Bollinger Band to start to trend sideways. See this one here, the Bollinger Band was trending sideways. You had a strong breakout, but then it never made a higher high. You see that? You almost have a double high here, or a double top. You have a double top there. So this would have been your validation to take this signal. That's a bearish validation. You have a double top. That's a strong enough bear signal to take that re-entry of the Bollinger Band. You could have taken a trade here. So you could have taken a trade here, stop loss above the double top, target the mid band, target the upper band. Obviously these moves are not very strong, so you want to be trading use these as scalp trades. So that's a 1% trade, so that's not a bad trade. That's a 2% trade, that's a 1% trade. A lot of these trades are probably going to be less than that, though. They're going to be less than 1%. So you want to be trading either a lot of contracts or high leverage with very tight stops. And that's basically it for the bands. Just make sure you follow the rules. Wait for it to trade sideways. Wait for validation from bullish candlestick patterns or bearish candlestick patterns, depending on which way you're taking the trade. Make sure you're using it on a 15 or a 30-minute time frame. You can use it on different time frames, but it's not as accurate. So if you want the most accurate form of the indicator, it is a 15 or a 30-minute. So make sure if you want to be trading the most profitably with this indicator, use either one of those time frames. This can be used in conjunction with the MoMo. I wouldn't use it in conjunction with the DBT Squeeze because they're obviously both based on Bollinger Bands and they will give you kind of conflicting signals. But this can be used with the MoMo to confirm the trend or confirm the price action. But that is it, guys. That's it for the DBT course. I really want to thank you guys for supporting me and the community by purchasing this course and making it all the way to the end. I'm glad that you liked it enough to finish it. And I really hope that this course was able to improve your trading, help you gain that edge that you really need to be a profitable trader. Make sure if you ever get into kind of a trading rut or you start to kind of lose money and you're like, wow, I don't know what's going on, just go back and retake the course or go over a few lessons again, and it should help you get back on track. I call it going back to the basics. It happens to me in my trading all the time. I'll get into a trading rut, I'll start losing, and I'll be like, all right, what am I doing wrong? I need to go back to my basics. Stop doing all the fancy stuff that I started doing recently. Let's go back to what I'm good at. So there's no problem with resetting, guys. If you find yourself just in a bad situation, just reset, go back to the basics, relearn, reread some books, or re-educate yourself on trading methods. There's nothing wrong with doing that, guys. And as always, if you guys have any questions, I am open to help you guys out. I am here to help you. Please contact me with any questions, and please take advantage of that 3-hour tutoring session that you get for purchasing this course. I will help tutor you one-on-one for 3 hours. If you guys have any questions about the course, the indicators, or just anything trading related that I can help you with, please take advantage of that tutoring. But yeah, guys, thank you so much for finishing the course. I really appreciate it. We will have more content coming in the future, so stay tuned. This is not the end of DejaBrew Trading. This is the beginning, so we will be having a lot of stuff going on in the future. Thank you guys so much for being here. Thank you so much for supporting me. I hope you guys enjoyed this course. You guys have a good night. Thank you.